So, hello traders, and welcome to another video webinar, of course. And this is another webinar from the series, which is called Become the cTrader Master. This is video number, I guess, 50 something. We are going to talk about advanced charting techniques during this meetings. Let me just share my screen with you so you can see it straight on. I'm supposed to have one nice chart for you. There you go. So I will put it full screen. I will put full screen my on my chart. There you go, and we are ready to rumble. So, advanced charting techniques is the title of the today's webinar. So welcome everyone to this very special meeting. And if you are already here, let me just remind you that there is over 50 more videos in our YouTube playlist, so you can go ahead and take a look at this, because we covered everything which is related to the cTrader platform on this videos. We covered how to open the position, how to manage the position, how to change them, the view, how to change the chart, how to use auto charts, how to use the other signals here, how to use the copy trading, cTrader automate, cTrader invite, cTrader analyze, trading, different trading settings, different let's say indicators as well. Plenty of things got covered during this meetings with me on the webinars. Again, over 50 of them is in our public YouTube playlist on the TopFX Global Ltd YouTube channel. Go ahead, check this out. Today, we are going to talk about advanced charting techniques. So basically, if you are wondering what is this advanced charting techniques, is just a kind of a different different kind of a channel, different kind of a chart. As you can see right now, I'm working on the euro dollar daily time frame chart, and this chart is a classical let's say candlestick chart. Let me just get rid of all of the deal map trades. So right now my chart is clean, and let me just maybe get rid of all of the targets, and let's see what else do we have. Chartska is quite cool. Tick volume, okay, let's leave tick volume grid, and there was one more. Okay, the positions are off, orders are off. Okay, this was price. I don't have any price alert. Okay, that's it. That's enough. So we just very quickly format our chart, and as you can see, you can right click using your mouse, do the viewing options, and there is plenty of the options to be choose of in order to customize your chart. This is like a standard chart, a candlestick chart, of course, and there's nothing wrong with using the candlestick chart. Nevertheless, if you are good in using candlestick formations or price formations, of course, you can always switch to the bar chart, and that's it. There you go. You set it already. If you know how to use the bar chart formations, you can do it. You can do it here without any problems. What else do we have? We have the line chart. Well, the most popular chart you use in school. The variation of the line chart is area chart. So you can see this chart very often in the financial media or the financial television broadcasts, of course. And then you got the dots chart and high-low close chart, which is a variation of the bar chart, really. So nothing special is here with a high-low close chart. If you've been trading for quite some time, you already know that this kind of a chart is one of the most popular ones. especially among the beginner traders, mostly because it's very easy to set up and it's very straightforward. So you don't need to have an economic degree, you don't need to have a 5 years background in the financial markets in order to understand what is going on here on this chart, because it is really easy to understand. When we zoom out, we can clearly see that this chart is showing us plenty of the let's say information that are related to the euro dollar. Of course, we are talking about the daily time frame chart. We can always switch to different time frame, but if you want to change our chart to something different, something more advanced, you need to remember that we can do it, but the informations that can be shown on this kind of a chart will be completely different than the ones that you get used to. For example, on a bar chart or on the candlestick chart. So let me just draw kind of a different chart for you, advanced chart. Look at this. The first one we are going to use is the tick chart, and we are going to set 10 ticks on the chart. Now, the major difference you see now, let me just zoom out for you to see a little bit more, is that this 10 ticks chart doesn't actually looks very like the daily time frame chart of the euro dollar, right? It looks kind of a familiar because you can see this rectangle here, and they are green and they are red, and price goes up, price goes down. Nevertheless, what is the most important is that when you apply this chart to uh, your setup, you don't have to pay attention for the time. Basically, every of this rectangles is 10 transactions, or one transaction is one tick. It doesn't matter up or down. The one transaction is one tick, and at the end of this transactions, you can of course take a look on the chart to see whether the market is trending up or down. Right, so if there's an uptick, because you can see it here, it's an uptick, or whether it's a downtick. Okay, so every 10 transactions. Right now we can change it. We can change it to every, let's say, sorry, ticks, 20 ticks, which means 20 transactions, 20 ticks. And this kind of a chart will give you completely different information about the current situation of the market. You can see there is no like a daily time frame chart, because 20 ticks can happen within 1 second and 20 ticks can happen within 5 minutes. Okay, so the time doesn't matter here on the tick chart actually. So what's the advantage then of using the tick chart for your trading? Basically, if you use the tick chart, you don't pay attention that much to the time, but you pay attention to the momentum, where the momentum is going, and you can ride the momentum if you want to. Right. So basically, if you are a momentum trader, you can, of course, apply some indicators like, let's say we apply the relative strength index. So maybe oscillators, relative strength index, and that's not a problem. You use the standard settings, and there you go. You got the overbought market conditions on the 20 tick chart. So you can see that roughly somewhere between 1.0953, 1.09, let's say 50. 52, 53, this is 1 pip, of course. There is some sort of the extremely overbought market conditions, so the market must go down. But please remember, this is the high at 1.0953 and 5. This is the low at 1.0946. This is not even 10 pips move. All right. So please remember this, that just because the market is 20 ticks, it doesn't mean it will cover a lot of ground. So that's why the tight spreads in the TopFX the broker will allow you to trade this market, even if you use so low levels, low settings like 10 ticks or 20 ticks. Okay, so you can even grab like a 5 or 7 ticks move. All right. Remember, the 7 pips move might happen within 1 minute, within 5 minutes, within 1 hour. Of course, 1 hour is a little bit overstretched. Nevertheless, you get my point. You don't pay attention to the time that much. 1 tick can happen during 1 millisecond. The other 19 ticks can happen during the next millisecond. So during the 1 second, there can be 6 pip move, right? Or even better, I don't know, 20 or something like this. The point is that this is a very good kind of a chart for the scalpers. All right, for the scalpers and for the day traders, they should use a tick chart. And this techniques is very often used with combination with some sort of the momentum indicator. What other momentum indicator you can use? You can use volatility indicator, like for example, you can of course use the 𝗙liche channels, or you can use the Bollinger Bands. Bollinger Bands will tell you straight on what's the volatility. As you can see, we got 20 ticks euro dollar chart, and those Bollinger Bands works just beautifully. So if you are short from the oversold, over about market conditions around 1.0953, you know that you can, for example, get out of the market at 1.0948, because these conditions, this level here is one standard deviation away from the middle of the Bollinger Band. Of course, you need to know how to trade using the Bollinger Band, but this is a common knowledge. You can find it all over the internet, right? So, for example, you can apply the Bollinger Band as a volatility measure. If you need another confirmation, really, if you need another confirmation, you can apply, as I said, the what is it, 𝗙liche channels, for example. It's a kind of a similar to the Bollinger Band, so they don't look very well together, basically. So if you remove the Bollinger Band, you can apply at last, in terms of the oscillator, volatility oscillator is tracking volatility. For example, you will see it here on the bottom, that this tracking volatility index is slightly different. As you can see, when the volatility increases, this index goes up, basically indicating that, okay, there is a volatility to the upside building up. If there is not much going on, the tracking volatility index will go roughly towards the zero, because the scale is from 0 to, let's say, 40 or something like this, or from 0 to -40, right? So it's of self-explanatory kind of a indicator. So one of the techniques is to use the combination of the tick chart together with some Bollinger Bands and maybe RSI and tracking volatility index. Nevertheless, please go ahead and experiment with your own settings, with your own indicators as well. Now, the other type of the chart is the Renko chart. And with the Renko chart, we are going to use 5-pip Renko chart. Why? Because let me just show you that the 5-pip Renko chart, let's get rid of all of these indicators here. They don't matter whatsoever. They completely doesn't matter. What do we have here? Let's just even get rid the Bollinger Band, for now. All right, let's zoom out. What do we have here is, as you can see, some sort of the bricks, and those bricks are being plotted on the top of each other, right? So right now we got this brick here from 1.0949.9 to 1.0955. Basically, one brick is 5-pip. It can take 1 second, 1 millisecond, 1 minute, 5 minutes, 3 minutes, 23 seconds for this brick to be made on the market. Again, time doesn't matter here. RA5, which means Renko 5, which is of course 5 pips of a brick, of every brick, doesn't mean that this is a 5-minute time frame. No, this brick, like, and this and this and this, every brick can be made within a split of the second, within 1 minute, within 5 hours, whatever. I'm just exaggerating, but the point is that the time doesn't matter. We need a market move of a 5-pip to the upside or to the downside in order to draw a brick, which is why this is a very nice advanced chart for the trend followers, right? Because let's see what's happened if I change my brick to 30 pips. If I change my brick on 30 pips, that means that every rectangle on this chart will be 30 pips, right? And there you go. You can see it straight on that. For example, if you go long from this level, you could go even, let's say, after this signal here, red, 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 green. You enter. Let's say we have a perfect entry. Let's live in the idea world for a second. 1.0590. You enter here. You exit. Let's say we got the perfect word. You exit here. Okay, you got scared. You exit here. It's 1.0858. So you just got yourself a couple of hundred pips. Okay, it's almost 300 pips here. But this chart is looking very innocent for you. Nevertheless, for the trend followers, people who has a trend following strategy, this kind of chart is a goldmine of information, and they can adjust the entry and exit levels using the Renko chart, very, very nicely. I don't want to say perfectly, but very nicely. Of course, you can combine. Okay, let's see. From here to here is 421. Let's say you freak out here. Exactly, this is 266 pips. Okay, let's say you ask, can we use some indicators? Of course. Remember, guys, indicator like, I don't know, for example, let's apply Bollinger Bands. Okay, let's apply first my favorite one, relative strength index, momentum indicator. Okay, standard settings. Okay, fine. Remember, what you see here on the indicator is exactly what you see here plus mathematical formula. That's it. All right, that's the difference between chart and the indicator. Chart is just a raw price movement, eventually plus volume. Indicator is a raw price movement, data, open, close, or even high and low sometimes, and indicator formula, mathematical formula. That's it. Which is why if you can have this indicator on your screen, you can easily see that there is extremely overbought market conditions. It can help you to focus. The indicator can help you to focus on important levels or important market conditions, like extremely overbought conditions, extremely oversold conditions. Okay, so you don't have to recalculate it for your own, or you can ask yourself, oh, isn't it too much because they are going up and up? Maybe it's a little bit too much for me. Maybe I should go short. But let's say there is no let me just get a cursor. There is no signal just yet. For example, you see only this, and you see that the market is still let's say like that. There you go. You got all of the green Renko bricks, and you see this. It's like, oh, the market hits the extremely overbought conditions. Maybe I should go short. You got the signal next brick, which is red, and you either exit your long position or you open your sell position. That's it. With the help of the RSI, it gets a little bit better. What else you can do if you want to use this advanced charting techniques is, of course, the Bollinger Band. Bollinger Band works very nice with this kind of tools. You can see it here. There you go. You can see how it goes up and up and up, a little bit overstretch, and then goes down. It should go to the level of 1.0850, somewhere there, in order to go up again, possibly. That's the idea. That's the plan, for example, right? So the Renko chart, another very nice charting techniques that you can use with a combination with another with another indicators like RSI or Bollinger Band. Right now, tick done, Renko done. The other one is the range. Let's just do 50 pips range chart. What it even means, 50 pips range chart? The range is the territory that that market covers Okay, let me share my screen back on again. Okay, guys, can you hear me? I think it's we are back on again, and okay, so we are sharing the screen. We got some temporary problems with the internet connections. Nevertheless, we are back. Okay, let me just switch it to the full screen again. So we've been talking about, of course, we've been talking about the range bars, right? So they can help you to spot the period on the market when you can see some kind of consolidations on one of the assets, right? If you decrease the range bars, for example, if you decrease the range bars to, let's say, we'll do the 20 pips, for example. Of course, this kind of a situation can happen much more often, right? As you can see straight on, that this market is not going anywhere. It's one big consolidations here, right? So every so the certain amount of the on the chart is basically a range bar. So we can see straight on this market is preparing itself to continue some sort of the movement. It's a little bit. Let's just compare it to, let's say, standard. I don't know, 5 minute. No, let's say, okay, 20 minutes chart. There you go, 20 minutes chart. You see, it works completely different. You can see all of this volatility up and down, up and down, up and down. So it's a little bit better to be spot on this kind of trading conditions on the 20-minute chart, right? Because it shows you all of this volatility that enters the market. When you got the range 20 pips, that's something completely different. You won't be able to you see, there's completely different chart here, and it looks like this chart is as well much more focused on bigger time frames. Let's say the time frame is not the correct word here. What I wanted to say is, like, you see this high here is being represented on the standard chart. Let's say, let's go back to 20 minutes. This high here is being represented. Let me just zoom out because it's far away from here. There you go. This is this high. You see how much you have to zoom out to see the same point on the market, right? The same level, the same swing high or swing low. It doesn't matter. Just example. Okay, so this is this kind of a chart will change your perspective, how you look at the markets. Okay, so it's not always there you go. With this kind of a market, you need to swipe it back if you want to find out the last. There you go, because the last swing high. There you go. It's here. All right, this is this one, and you can still see it when you're trading range bars. If you're trading the normal bars, normal candlesticks, standard candlesticks or bars, the amount of noise you see here is way bigger, which again helps scalpers and day traders and blur the image and create additional, let's say, complications, and let's say it creates some kind of a not that clear image when you are trying to when you are a longer term trader. You don't have to be weekly. Yeah, you don't have to trade weekly on weekly time frame chart to be a longer term trader. You can be 4 hours or 6 or 12 hours trader, and if this is your perspective, there you go, you are a long term trader. And the last one I wanted to tell you about is the Henki Nashi. And the Henki Nashi, let's say we switch the 10 minutes. The Henki Nashi, it's a special let's say chart, advanced chart, just because, let me just get rid of RSI. There you go. Just because it's if we zoom in, you'll be able to see it clearly. You see, maybe 10 minutes. Let me just switch to 20 minutes so I can see you as well the let's say the advantages of using this chart. Because if you are trend trader, you can see it clearly that this chart is trending, and the trade is being made when you don't have the uptrend is being made when strong uptrend is being made when you don't have the lower wicks, and a strong downtrend is being made when you don't have the upper wick. So as you can see here, it was a very nice opportunity to go short, and this is roughly about let's say 20 pips. Okay, so again, this kind of a chart can filter out noise, can filter out let's say your worst entry levels by filtering out the market noise, and it can show you whether the trend movement is strong enough and to give you the amount of pips you want. Like if you want 20 pips, you know that you need to get out somewhere here, because there is no way this chart will go, let's say after this candle, you know that you need to be out, because there won't be 40 pips to the downside or even 100 pips to the downside, because the market is turning back. As you can see, it went back above even this level here. So again, very good tool, very good kind of a chart for the traders who are actually looking for something else, something different, something that is giving them additional edge over the regular uses of the bar chart or candlestick charts. Okay, so you can switch to the Heikin-Ashi. Of course, there are some kind of a let's say disadvantages of this chart, because sometimes it can be, you know, misleading. Nevertheless, every chart can be sometimes misleading. Every chart can give you a false, let's say, signals, especially if the volatility is kicking in and it's the market is going crazy, like during the, for example, the news release or economic data release, right? So or central bank interventions on the forex market. So this actually this situation can happen, of course, more often than you want it. Nevertheless, you know, it's a part of the trader's life. If we switch this Heikin-Ashi to 1 hour, let's see what's happened. You can see it clearly that this trend, this chart has changed, and you can see the movement to the downside, which can be actually a little bit bigger in the range terms, right? So you got 1.0939 as a very extreme bottom, 1.1038 39 as an extreme top. So this is a 100 pip movement, right? So you can catch using the 1 hour, using the 1 hour minute setting, you can catch this kind of a movement. If you trade, for example, 4 hour setting, the situation will be completely different. You can catch even bigger moves here. For example, oh no, that's not the one I wanted. For example, you can catch this very I just want to move it a little bit right there. You go. You can catch this very nice movement to the downside from this highs, roughly around 1.10. That was 1.1130, let's say, towards this 1.09. So that's over 220 pips, right? So, and it's clear for the traders, because they for example, let me just move it here. For example, they open the sell orders when after this series of the nice blue candles, the red one appears. Let's say you open a sell order and then you just wait for another blue candle to be here, and the blue candle appeared just here and you are out. Okay, and you're out, and that's it. That's the one of the, I don't know, the simplest strategy for the swing trader that can be applied on different settings on a different market using the Heikin-Ashi, just for example. So that's, of course, can be filtered out by the settings on the stochastic indicator, ASI indicator, Bollinger Bands, and anything else you want to make your entry and exit to the market more precise. It's up to you, basically, how you will do it. What kind of indicators and what kind of settings of these indicators you are going to use, because you are the one who will pull the trigger and trade the markets using, for example, the cTrader and this advanced charting techniques. That's everything from me for today. Thank you very much for being here with me. Thank you very much for following this series, Become the cTrader Master. I hope this information provided by me tonight was helpful for you, was informative, and you learned something. Maybe you will give it a try in your everyday trading. Maybe you will upgrade it. Maybe you will make it a little bit better, or even way better than it is. Maybe it will inspire you to create one of your strategies based on the information that you heard here during this webinars. So I would be really satisfied if you do this, if you actually apply one of these insights, one of these informations to your everyday trading. For now, thank you very much for being here. It was my pleasure to host this webinar tonight. I wish you a pleasant evening or pleasant day. It depends, of course, where you live right now, and I hope that we will meet again in a week time here in this room for another webinar from the Become the cTrader Master series. Thank you very much. Take care. Bye bye.